We want to help our clients issue bonds for the first time because we want to broaden the issuer base in markets and strengthen local debt capital markets. We believe that deep and liquid domestic capital markets are essential for a growing economy. For an economy to most efficiently use its available resources to invest in companies that are innovative and that are growing, it can't only rely on investment from banks and other traditional lenders. It needs to be able to tap pools of money that are located elsewhere, like at insurance companies or pension funds or even in retail. And a strong debt capital markets is able to channel those pools of money into investment in companies that are growing. For example, right here in Mexico, the markets are fairly developed, but they're only accessible to companies that are either highly rated or well known. And what we want to do is we want to work to bring new companies to the market. There are a lot of good companies out there, and we feel like if we can bring them into the marketplace and include them, it will only strengthen the market. It can be a daunting process to try to issue a bond for the first time, so I guess I'd have two pieces of advice. The first is it's very important to choose your partners wisely. Between the arrangers, the lawyers, and potentially the guarantor, it's going to take a team effort to achieve that first issuance successfully. The second bit of advice that I would have is, it's important for the company to keep in mind why they're entering debt capital markets and issuing a bond for the first time. In many cases, the objective is not going to be to have the cheapest possible funding, but it's going to be a long-term strategy to diversify their funding source away from bank lending. And in many cases, to be able to diversify that funding source and to be able to reliably access debt capital markets, that can lead to good success for the company in the long term. Now, we have a lot of products that we use to help clients come to the market for the first time. For example, let's say that there's a company that wants to issue a corporate bond, but they don't quite have the credit rating that's high enough to be able to access the target investors that they want to reach. We can work with that client to provide a partial credit guarantee. And what that is we basically agree to guarantee a certain percentage of that bond. Just yesterday here in Mexico, a microfinance institution named Camesa successfully issued its second bond with the help or support of an IFC partial credit guarantee. Now, we've known Camesa for a long time and have worked with them for a while, and they were able to raise 200 million Mexican pesos through the issuance of a bond that had a credit rating that was 3 notches higher than their corporate rating. Now, success for IFC is for companies like Camesa to be able to issue on their own over the long term, and through their first two issuances, they've been creating name recognition in the market. And we're optimistic that as more investors get to know them better, they'll be able to issue on their own. Now, we also have other products. So if a company doesn't necessarily need credit enhancement, we can act as an anchor investor in the bond by agreeing to buy a certain percentage of the bond, like 20 to 30%, to help build some momentum for the arranger to run the issuance process. Or if a client has assets they want to securitize, we can help with that. Regardless of the product that we use, what we want to do is come up with a tailor-made solution for the individual client to be able to help bring them to market for the first time and broaden that issuer base. I've been coming here for a number of years, and it's a great event. It brings a number of players from bankers to lawyers to people from development finance institutions all together to talk about very relevant topics that people are talking about in loans, bonds, and derivatives. So I think this is a great way to get people together and to keep the conversation going.